Welcome back, everyone. It is Wednesday, March 20th, with Not Your Advisor, an NYU grad. Let's jump right in. We have a lot to cover today. I actually have like 40 plus charts for premium members to cover, but at the top of the hour, I'd like to kind of just share that I listened to maybe half of the Powell uh, speech, so to speak. The gist I got from it was that inflation is for poor people, right? Because the data that he's acting on is not real. The true inflation for 99% of the population is not being accurately reported. So that tells me that the establishment, they don't care. Or else they would be reporting true inflation and interest rates would be well above 10% to fight the real inflation. But we continue to pretend that inflation isn't a problem, that the rate of inflation continues to go down, and it's in such good shape. Expect three cuts this year sometime. That was the narrative. Um, some of the written parts of the Fed notes were kind of hawkish, but when he started talking, it basically was evident that this was going to be a very dovish presentation, and the markets skyrocketed, basically. I had posted in the morning a chart of the S&P or the SPY, and we were basically drifting all pre-market overnight into the open session between like 515 to 517, just waffling around from the pre-market to the open up until the 2 o'clock time. And there was almost no volume. The SPY had traded 10 million shares uh, through the noon lunch break, if you can believe it. Um, yeah, like the whole world was just basically waiting for this event. But let me go through the setups here. We had 1,222 new highs today and just 165 new lows. 77% of shares were advancing versus 19% declining. 34% of stocks were below its 50-day moving average, and 31% of shares were below its 200-day moving average. But it was a very big rally after 2 o'clock. A couple of things that stuck out to me were Nvidia is back above $900. Gold, silver, and Bitcoin all launched off of this dovish speech today. Um, Pretty much every sector was green other than healthcare. Healthcare was marginally down 0.11%, but every other sector was green. You had basic materials up 1.77%, consumer cyclical was up 1.53%, you had financials up 1.44, technology up 1.32, communication services up 1.28, industrials up 1.21, real estate up 0.69%, utilities up 0.52%, energy up 0.35%, consumer defensive up 0.34%. It was very hard pressed to find things that were very weak in the equity market. And this is going to be conveyed by my typical what was strong list. All right, are you ready? I'm not going to do this in one breath, but here we go. Marathon Digital up 16.1%. Coinbase up 11.63%. Affirm Holdings up 11.41%. Bitfarms up 11.16%. Carvana up 9.56. This is all percent now, right? MicroStrategies up 9.1. Wayfair up 8.1. Sweet Green up 6.3. I ate lunch there today, by the way. Crocs up 6.29, ACMR up 6.06, Lyft up 5.73, DraftKings up 5.69, Backblaze up 5.5, Ally Financial up 5.4, Arm Holdings up 5.41, DoorDash up 5.41, K Hovanian, the home builder, 5.37, Kava, the food quick serve restaurant, up 4.95, Shopify up 4.9, Kinross Gold up 4.89, Beazer Homes up 4.84, GDXJ Junior Miners up 4.84, Uranium URNM up 4.53, PaySafe up 4.21, Monday.com up 4.15, GDX up 4.13, Wheaton Precious Metals up 4.11, Pan American Silver up 3.87, Delta Airlines up 3.75, Roblox up 3.73, Zeta Global up 3.7, Arc Innovation Funds up 3.5, Yext up 3.4, Dell up 3.3, Palantir up 3.2, PayPal up 3.24, GM up 3.3, BTG 3.21, uh, KRE Regional Banks up 3.13, Sprout Social up 3.09, Broadcom up 3.07, VinFast Auto up 2.96, Instacart up 2.95, Gold, which is Barrick Gold, up 2.82, CarMax up 2.76, Tesla up 2.53. You get the picture? Um, Very bullish day after the Fed meeting and speech. Weak, not much. The VIX, natural gas, and bearish ETFs. So for free members, keep watching the Magnificent Seven, keep watching yields, and unless two out of these three things that I'm about to list turn bearish, there is no reason to be uber bearish. So number one, the 10-year yield, is it above or below 4.5%? If it's below it, it's bullish. If it's above 4.5%, it's bearish. The Mag 7 and the semiconductor names, are they in good shape? Are they generally all above the 50-day moving average? How are they in relation to the 21-day exponential moving average? And the third one is breadth. Who is winning? New highs or new lows every day? So until you have two out of those three things turn bearish, there is no reason to be uber bearish here. So with that, for the premium members, please stay on.